Hello and welcome back to the channel. Today we are going to discuss a defense stock. Defense has been in prime focus due to the outsized returns in the last few years. We will be trying to gauge the value of the company without the primary purpose of this video being a buy or sell recommendation. Today we will be analyzing Bharat Electronics Limited. Incorporated in 1954, Bharat Electronics Limited manufactures and supplies electronic equipment and systems to the defense sector, primarily, and also has a few non-defense orders. Company was formed under the Ministry of Defense to handle Indian defense electronic needs. BEL is a multi-technology conglomerate that provides products and systems to India's armed forces in areas of radars and fire control systems, missile systems, communication and C4I systems, electronic warfare and avionics, naval systems and anti-submarine warfare systems, electro-optics, tank electronics, and gun upgrades. BEL is also present in the non-defense space with 20% business mix towards non-defense and 80% towards the defense space. BEL's core focus lies in developing advanced electronic solutions for defense, aerospace, and other strategic sectors. Let's analyze some of the key orders serviced by the company. The largest export order was $93.15 million from Airbus for manufacture and supply of radar warning receiver (RWR) and missile approach warning system (MAWS) under the prestigious C-295 aircraft program. It also delivered an order for the largest avionics order worth $303 million from HAL for manufacture and supply of critical airborne electronic system for the LCA Tejas fighter aircraft program. It also serviced a $140 million order for the Instrument Electronic Warfare Range (IEWR). The Defense Ministry described the contract for the development of IEWR as a significant step toward enhancing the capabilities of the Indian Air Force. BEL was also involved in developing the Advanced Electronic Warfare Suite for fighter aircrafts. From radars and sonars to communication systems and electronic warfare equipment, BEL's offering encompass a wide spectrum of defense technology. Let's analyze the order book currently with BEL. The company has a healthy order backlog of nearly 76,000 crore, providing strong revenue visibility for the next 3 years. It has won orders worth 35,000 crore against its earlier guidance of 20,000 crore in FY 2024. The company is expecting order inflows of close to 25,000 crore in FY 2025. Looking beyond this conservative estimate, BEL has its sights set on even better performance. Large defense programs like LRSM, QRSM, and others are undergoing successful trials and could be finalized this year or the next, translating into significant additional inflows. The company is also confident about exports. Export orders now stand at $407 million as against $211 million in fiscal 2023. Exports have a strong visibility considering that in fiscal 2024, export revenue was merely $110 million. If you look at the order book multiple or the revenue to order book multiple, it has been in the range of 4 times. Historically as well, in FY 2022 it was 4 times, in FY 2023 it was 3.5 times, whereas in FY 24 it was 3.7 times. But what changed in FY 24 was that there was a significant increase in the order book. There was an increase in the order book in the range of 35,000 crore as described earlier, and this has taken its order book close to 76,000 crore. The company is also investing in building capacities and capabilities with research and development and other capex expenditure now at elevated level. It is working on augmenting or developing new facilities at 3 different locations to cater to the new demand. BEL has indicated that it would invest close to 700 to 800 crore in capital expenditure annually, which will increase its capacity significantly over the next 2 years. During the quarter that ended in March 2024, the company recorded 32% year-on-year growth in revenues, which was much ahead of market expectations. The company had earlier said that it will improve execution in some of the delayed projects, and it is now getting reflected in the revenue numbers. Additionally, a strong growth in exports and non-defense revenue helped the company to register better growth. Company currently has a market cap of 208,000 crore with a price to earning multiple of 52.4. The company currently has no debt on its book and has a ROE and ROCE percentage of 26.4 and 34.8% respectively. The company has planned to spend 700 to 800 crore on capex this year. Additionally, R&D spending will remain at 6 to 7% of revenues, which on FY24 revenue works out to 1,200 to 1,400 crore worth of research and development indicative spend. This is critical to ward off competition from the private players and build a barrier to entry for the business. The company, as at FY 2024, has 11,000 crore worth of cash on its book. The company also has 15,000 crore worth of reserves in its balance sheet, giving BEL sufficient plowed back profits and cash for future expansion and a comfortable financial position. The dividend payout ratio to the business stood at 53%, which was higher than the mid-40s dividend payout ratios in the prior years. As at FY 2024, the company did a revenue of 20,000 crore, on which it made a net profit of 4,000 crore, which is an impressive profit margin of 20%. The profit margin at FY 23 and FY 22 were 17 and 16% respectively. This demonstrates the company's focus on improving bottom lines and not only increasing revenues. In the last 3 years, profit has compounded at a CAGR of 24%, and given the higher market cap of over 2 lakh crore, it would be interesting to see if this trend continues. The stock price in the last 3 years has moved up at a CAGR of 82% annually. The dividend yield of the company currently stands at 0.63%. In the next section, we will look at some of the key inferences from the earning transcripts as at FY 2024, because I feel there is a gap between what the analysts are saying, and a lot of people who are on YouTube are not giving analysis as to what the management has said in its earning transcripts. And this, in the Western world, in the stock market, in the US, becomes of prime importance and is the best friend of investors who are looking to seriously make money out of the stock market. As per the earnings transcript FY 2024, the management has guided that they currently have over 300 SKUs and they're constantly looking to improve the EBITDA percent, and have guided for an EBITDA percent in the range of 23 to 25% for the coming few years. The management also mentioned that in the FY 2024 numbers, the company had an order to the tune of 1,000 crores for the production of electronic vending machine, and they would compensate the lack of these orders in the next year through non-defense orders like airport surveillance radars, metro platform screens, and have guided the non-defense revenues to be in the range of 15% of the overall revenue. In terms of the mix of revenue, the management has guided that 90% of the revenue is from the sale of goods and 10% is from the sale of service. For the production of 83 light combat aircraft Tejas, the avionics contribution of BEL was 2,000 crore, and for the remaining 97 aircrafts in pipeline, the avionics contribution will be in the range of 2,500 crore. HAL order book is expected to grow from 90,000 crore to 3.5 lakh crore in the next 3 to 4 years, and this should provide BEL with fresh orders from HAL. Post the Balasore train accidents, government is swiftly moving towards the Kavach technology, which is the Indian developed anti-train collusion mechanism. BEL is one of the 3 vendors for the Kavach implementation across India. BEL should benefit from various factors. First, the emphasis on the localization of electronics manufacturing and import substitution presents a decent opportunity for domestic companies like BEL. This is supported by a robust lineup of defense projects earmarked specifically for Indian entities. Many defense projects which were delayed have started moving towards finalization. Further, BEL's strategic endeavors are anticipated to support higher growth. These comprise optimizing products, maintaining a steadfast commitment to innovative research and development, and broadening revenue channels through the expansion of non-defense sectors and export markets. There is also the growing competition from private players in few of the SKUs that BEL has, but none of the competitor has a wide-reaching product range that BEL has. Having said that, BEL needs to constantly deploy research and development to outsmart its competition and stay ahead of the pack. If you found this analysis helpful, don't forget to like this video, subscribe to our channel, and hit the bell icon for more insights on top companies. Thanks for watching, and see you in the next video.